Imagine saving every penny for 30 years just for your retirement. Everything looks perfect until the global economy suddenly crashes. You try to grab your cash, but your broker vanishes into thin air. Then you find out your massive life savings never even existed. It was just a total lie sitting on an old computer screen. Welcome to the dark world of elite financial fraud. Most people think massive corporate scams get caught by regular audits. But standard auditors just check basic boxes and trust what they see. So when a massive scam is running, those normal checks fail completely. That is when you need a forensic accountant. These guys are not typical desk workers. They are top-level money spies. They treat boring spreadsheets like a physical crime scene to hunt down thieves. Today we are breaking down the gears inside the 4 biggest scams in history. You will see how a bloody mafia empire fell from one tiny notebook. We will expose an energy giant that faked billions and ran their shredders until they caught fire. We will uncover a healthcare network that hid massive crimes using $50 entries. And finally, we will break down a giant Wall Street illusion that vanished overnight. The tricks these criminals used are terrifyingly simple. But the trails that caught them changed the world forever. Back in the 1920s, Al Capone was the absolute king of Chicago criminals. He was ruthless. His mob pulled in around $100 million every single year. They ran massive illegal gambling dens. They controlled secret underground bars and violent smuggling networks. The police knew he was a cold-blooded killer, but they could never prove it in court. There were no witnesses. Capone was incredibly smart about hiding his tracks from the law. He never had a personal bank account. Not once. He never signed his name on a single business check. He never bought luxury property under his own name either. Instead, his entire empire did business with stacks of cold cash. Green paper bought his safety. Whenever the government asked about his income taxes, Capone just smiled. He claimed he earned absolutely nothing and he didn't own a thing. But in 1927, the United States Supreme Court changed the game. They gave law enforcement a revolutionary new weapon. They ruled that even dirty, illegal money is fully subject to federal taxes. Crime had a tax rate. That historic decision brought in a man named Frank Wilson. Wilson led the IRS tax spy unit. He did not care about flashy street shootouts. He only cared about following the hidden paper trails. So Wilson locked himself away. He sat inside a hot, dark government storage room for years. He hand-sorted through thousands of loose pages, dusty receipts, and old files. The work was brutal. The tiny handwriting strained his eyes so badly it caused permanent physical damage. He had to wear incredibly thick glasses for the rest of his life. Yet the massive break in the case did not come from a fancy bank vault. It came from a messy, grease-stained notebook. The ledger was seized in an old gambling raid. Inside, Wilson spotted a basic list of costs like dice and guard salaries. At the bottom, the ledger showed the casino's final cash profit. And right next to the payouts, it listed cash given directly to AC. 2 letters changed history. Wilson knew AC meant Al Capone, but he had to prove it to a jury. The entire federal case almost failed completely. Then, they got incredibly lucky. Years before, a local mob bookkeeper got pulled over for drunk driving. Wilson located that old traffic ticket. He examined the signature. It matched the handwriting in the secret casino notebook perfectly. The ink did not lie. The terrified bookkeeper faced years in prison, so he quickly agreed to talk. Finally, the government had a direct link from the illegal cash straight to the boss. In October 1931, Capone went to prison for 11 years for dodging his taxes. The biggest gangster in America was beaten by a quiet man with a calculator. This single case proved that financial forensic analysis could destroy untouchable criminal empires. But while Capone hid physical cash, future corporate scammers built far bigger lies using Wall Street stocks. By the late 1990s, corporate scammers stopped using grease-stained notebooks. They hid their tricks right out in the open on Wall Street. The absolute master of this game was an energy giant named Enron. Enron started out as a boring pipeline business, but they wanted to look like a hot-tech giant to boost their stock price. They were completely desperate to please investors, so their money boss, Andrew Fastow, used a sneaky accounting gear. Usually a business logs a profit only when actual cash comes in. Fastow flipped the script. His trick let Enron log predicted future profits the very day they signed a deal. Think about that. If a deal might make $20 million over 20 years, they logged it immediately. The cash was not real yet. It was just a random guess on a piece of paper. So when the deals failed later, Enron was stuck with massive hidden losses. Fastow could not let Wall Street see those losses or the stock would tank overnight. So he created fake dummy companies that Enron secretly controlled. Whenever an Enron project failed, Fastow quietly moved the bad debt to them. The debt simply vanished from Enron's main balance sheet. To the public, Enron looked incredibly safe and profitable. The scam was so intense they even paid real taxes on the fake profits. They did this on purpose to keep tax auditors from snooping around their books. It was the ultimate cover-up. But a fake business cannot burn through cash forever. In August 2001, a company vice president named Sharon Watkins spotted the math. She sent a secret note to the CEO, warning him they were about to explode. She knew the end was coming. By October, the government opened a massive investigation. Panic hit Enron's elite auditing firm like a lightning bolt. Bosses ordered workers to stay late to shred files. They ran the shredders so long the machines overheated and jammed up. The rooms literally filled with thick smoke. Terrified workers had to rip up thick binders by hand to hide the evidence, but it failed. Clever money investigators stepped in and rebuilt the digital trail from scratch. They proved Enron wiped out $74 billion of investor money. Fasto got 6 years in prison, and Enron went completely bankrupt. The giant house of cards fell. But while Enron hid real debt, a Wall Street legend built a far bigger lie. Bernie Madoff was an absolute legend on Wall Street. He was the chairman of the NASDAQ. So wealthy investors trusted him completely. He promised them steady, perfect returns whether the stock market went up or down. He claimed he used a highly complex trading strategy to protect their cash. But the entire operation was just a total illusion. Madoff was secretly running the biggest fake investing circle in human history. The math behind it was shockingly simple. He never bought a single stock for his clients, not once in decades. When wealthy people gave him their cash, it didn't go to the market. It went straight into a regular bank account at JP Chase. If an old investor wanted his cash back, Madoff just used a new investor's money to pay them. The whole system relied on printing millions of pages of fake trade papers. They even printed them on old, loud printers to make them look official. The numbers perfectly matched real market prices, but only after the day ended. A brilliant fraud investigator named Harry Markopolos finally saw the lie. He was a pure math expert. He spent nearly 10 years sending detailed proofs to a completely blind government. He proved Madoff's numbers violated the basic laws of mathematics. If the trades were real, Madoff was buying more options than the market even had. The setup required a stock market that literally did not exist. But the regulators completely ignored the warnings. Then the 2008 financial crash hit. The global economy panicked, and Madoff's investors suddenly needed their cash. They hit him with a massive wave of withdrawal requests totaling $7 billion, but Madoff only had $300 million left in his account. The math collapsed instantly. In December 2008, Madoff sat in his fancy Manhattan office and poured wine. He called his sons inside, and then he calmly told them his whole business was just a big lie. He was arrested and got 150 years in prison. Special accounting teams spent years untangling the mess across global banks. They sued to get the money back and recovered over $14 billion. Madoff stole billions out of pure greed. But down in Alabama, another corporate network faked profits by thinking incredibly small. In the early 2000s, a massive healthcare company called HealthSouth completely ruled the industry. They owned thousands of clinics and boasted a giant $10 billion market value. But then, unexpected changes in government funding suddenly slashed their real corporate profits. The company faced a massive financial crisis. Their charming CEO, Richard Scrushy, refused to report lower numbers to Wall Street. So his financial team started meeting in secret corporate rooms. They called these secret sessions fixing the hole. They knew standard auditors only check big transactions above a certain size threshold. If a bill was under $5,000, the automated tracking filters missed it entirely. So HealthSouth didn't make one giant fake entry that would trip the alarms. Instead, they decided to think incredibly small. The team used software to dump thousands of tiny fake bills directly into the system. We are talking about fake $50 and $100 charges. They scattered them randomly across thousands of local clinics. To make the fake math look real, they had to balance the books. Every time they added fake income, they added a fake asset like clinic equipment. They spread these ghost assets so thinly across America that nobody noticed. It was brilliant, and it slipped right under the nose of regular company bosses. But keeping a $2 billion secret eventually turned into pure paranoia. Trust vanished. The executives became terrified that the FBI was bugging their offices, so they fled the building. They started meeting inside a local grocery store to talk safely. But they did this to block hidden microphones or people reading their lips. They whispered fake tracking numbers straight into the grocery shelves. It was completely crazy. The plot finally shattered when a worker told the FBI everything. Scrushy was the first CEO tried under a strict new business law. But his lawyers convinced the local jury that his workers did it alone. He walked away free, he escaped criminal charges, and however, a civil judge later ordered him to pay $2 billion. The Health South scam proved that white-collar thieves will do crazy things to hide, but it also proved something else. No matter how clever a money thief thinks he is, he always fails. They forget that paper trails outlast the lie. Every single time. Al Capone built a cash fortress, but a grease-stained notebook ended him. Enron faked an empire, but their shredders burned out before destroying the truth. Bernie Madoff ran a giant ghost fund, but the math broke his illusion overnight. And Health South hid inside tiny entries, but grocery store whispers couldn't save them. Traditional auditing is just a basic checklist, and it assumes people are telling the truth. But forensic accounting changed the world by assuming the numbers are actively lying to your face. It treats a balance sheet like a crime scene to track human behavior. Elite criminals spend their lives looking for holes to make easy billions. They buy politicians and blindside the government. But in the end, they always leave a digital footprint or a paper trail. And that is all a forensic accountant needs to start digging.